Hey everybody, welcome to the Options Domination webinar. Nobody cares about me right now because everybody's asking, where's Josh? Is Josh gonna be on? And is he gonna, we are gonna go over some signal analysis like last time. So we are going to do that, and we're also going to go over tons of really awesome updates. Um, this has been, I mean, as you can imagine, it's been a crazy month and a half. Between launching a company, two really big personal medical things going on, and just it's just been a great run because handling the trading side is awesome, and then handling all the coding side and the affiliate side is awesome, and now we'll be able to kind of combine everything together and go through there. So let's go through the agenda for this webinar. Okay, so the agenda for this webinar is that we are going to be talking a little bit about the algorithm updates, and we're going to tell you what the upcoming algorithm updates are, which Josh can confirm should be ready in the next week or so. And you guys don't have to worry because they're really in his hands, and the entire team is working on those right now. So that should be done in the next week or so. We're going to talk about the results of the previous changes we made in the last week. We're going to talk a little bit about the event coming up and what's been planned for the event for all of our Options Domination members. And we're going to go over some of the affiliate side things and so on. Okay, so if you guys got all of that and understood what I just said, if you could just say, yes, I can hear you and I can see your screen and I'm on. All right, so you can all see that the best site in the world is open on my screen right now. Okay, so Josh, if you would like to say hi again, everybody kind of knows you already, but
Hi everybody. Hi everybody. Hope you're all doing well.
All right, there you go. Man of few words, but very weighty and useful words. So what we're going to do is we will analyze our MR1 signals from the past week, and we're going to go over some statistics as well. By the way, really quick, before we continue, if you made money this past week using Options Domination, if you could just say yes or I made money or something like that, that would be pretty neat. All right, so here is why I like doing that is so we have Josh, can you see these questions? Yeah, do you see this in the chat box? It's like
Just give me 1 second. I see it's loading now. One moment.
hundreds of people are literally writing in here. So it's pretty awesome, right? Because now we have two companies where we can actually pretty proudly say that our users are generating a net profit. Okay, Troy did 800 plus, 15 trades and 12 wins, 300 bucks, and so on and so. I can like, keep reading, but it'll be
excellent. Excellent.
Waste of time. So let me begin with the algorithm updates and what are some of the things that we have done and what's coming. So there are two things that are coming. First is going to be the MR3 signal that is about to be launched in the coming week to week and a half at most. The MR3 signal is going to be the end of next hour signal. Okay, so it's going to be under 2 hours total because let's say it's announced at let's say 12:21, the signal will appear, and the expiry is going to be 2 o'clock. Okay, so it's going to be the end of next hour. It's going to cross over the end of our effect and everything else. The beauty of these signals is, again, in the back tests, these signals are at around 64% win rate. Is that right, Josh? Around 64%?
Exactly, yeah.
Is where these are, okay. And then the great thing about these, though, is that compared to the MR1 and MR2 signals, these have an average pip movement. When they win on average by 13 pips. Now, here's why that's really good. That big of a movement means that you can get in when you enter the trade on Nadex. You can purchase a contract that's a little ways away and get it at a very low price, and therefore you don't need to even win as much, right? You could have a win rate of 30% at Nadex and still be dramatically profitable. Remember, somebody made a post, I think, on Friday that they made $2,400 off of some trade on Nadex. That's really what we're talking about, and we're going to be much more intentional about it, and we're going to be releasing some very specific training, as well as we are actually currently trying to figure out some sessions and a specific strategy for Nadex itself, just so our members can do really well with that. But this alone will be very useful because It's 2 hours away. It gives you plenty of time, and because you can put the working order in at Nadex, you have a pretty significant period of time where the movement in the market can allow you to leave profitably. It's just awesome. And then the second thing that we already actually made this live, but we didn't say it because they're currently labeled under the senior trader signals. Okay, so these are one section of senior trader signals. These are called CS signals. And these CS signals last week performed at, I think, about 86%, was it? Or 85?
Yeah, exactly. It was 85.7.
85% was the win rate last week. And then in a 3-month back test, we did the test over 6 months, but we have some concerns about the first 3 months of data. So the 3 months of data that we're absolutely sure on is good. The 3 months of data actually generated about an 85% win rate over the past 3 months as well. So again, a very, very strong signal. This is being made live as well. And this is going to be marked as CS, it'd be the type. And one of the good things with this is that, like I said, we already actually released it this past week, but we didn't tell anybody because we wanted to observe how this behaved amongst, everything else. And so you guys must have seen these end of the next hour trades that were available in there. That's what those were. And performed extremely well. We are very confident they'll continue doing well going forward. And once again, these are end of next hour, so the same thing applies. You have plenty of time to get in. Josh, do we have a number on the average margin of victory? Like, what is the average pip difference, or are we still calculating that out?
That's actually the calculations done behind that, but we can release that number sort of Wednesday by the coming week. It should be around 20 pips, 15 to 20 pips on average, because these signals are called after the main market session around 4 p.m. GMT, yep. 4 to 5 p.m. GMT.
But the liquidity is ending.
Exactly. And they're mainly mean reversion signals as well. So yep. They win by quite a margin when they win.
Okay. So again, when they win, we are talking about 80% plus. But let's say that was only 60% plus. Once again, the fact is, if you are winning by 15 pips difference, you can get in on a contract at $10 to $15 and really just be looking at winning, let's say 40% of the time, but you are getting 1,000% payout. I mean, you could win very, very rarely and be very, very profitable. So again, highly recommend this. In fact, I did want to recognize there's a member within Options Domination, Larry, who has been putting out these, he does very well on Nadex. He's been putting out these Nadex strategies for free, just for everybody. So you guys have probably seen that in the Facebook group as well. But, read those documents. I actually read the document. I was pretty happy with, I love it when people participate and we kind of get this community feel going. Everybody's working together. So that's been really good. But again, both of these signals are coming out starting next week. Well, this will be starting next week. This has already started, but we'll be labeling it differently now. And they're great for Nadex. You have plenty of time to get in for them. They have a very strong win rate. Just, overall is a really, really good thing. So you want to get in on those. Now, let's talk a little bit about the split algorithm really quick, okay? It's because that's kind of the rage these days. Josh was pretty impressed with me finally. I have to work very hard to impress this guy, and finally he was like, oh, so I was reading about this, and well done. And I was like, oh, wow, I got a well done from Josh. So here's the point about the splits. So we had a very strong algorithm already, okay, in that it would predict where the market would go. Okay, it would predict the maximum we expected the market to go in a shorter time frame, and then for it to rebound back. The problem was that many times you don't hit that split value. Now, that's still going to happen, okay? There are still going to be many times when that split value is not going to be hit. And that's natural, okay? That's expected. That won't happen simply because we are predicting the future, right? And you're not always right about predicting the future. So what I did is I made a little tweak in there where instead of issuing the maximum we expected, I issued the average of 3 different price points that we expected it to hit. Okay, so that kind of lowered it. Instead of going this really maximum level, it kind of lowers that down. So these are much more achievable now. So that's what you probably saw the last 2 days, especially on Thursday and Friday. Once this was in action, you were probably able to take almost every split. I think they all but one split actually hit the price, and all of them won. Every single one that actually hit the price, all of them won. So it's it's kind of nice seeing that all of this is working really well, and we are pretty excited about it. Now, regarding these signals, we're going to make the MR3 signals live for everybody. Okay, everybody's going to get access to those. The CS signals are going to be available only for enterprise and legacy. Okay, now part of the reason for that is that CS signals are obviously very high win rates, but they're also lower in volume. Okay, and so you can, if you're on inheritance level, you'll get these and you can do a lot with this. Josh, what's the volume that we can expect on the MR3 and CS signals?
Okay, for the MR3, it is about 2 to 3 signals per day, closer to 2. So it's a bit lower than the MR1s. And the CS signals is currently clocking in at 1.6 signals a day. So about 3 signals every 2 days. There is this trade-off between volume and ITM. So
yes, yes. And again, we can actually run some numbers on this for you guys, and we'll show you why this is actually a very, very profitable thing. You want lower volume, especially because when you're trading manually, your chances of hitting a bad signal go down, right? That's the thing that you want to avoid the most. The biggest thing you want to avoid is losing a trade. So what would you rather have? 10 signals a day where you win 7 of the 10, or 5 signals a day where you win all of the 5? Obviously, getting those 5 signals a day is much more preferable, because your odds of hitting those 3 signals that you lost go away completely, right? So then you can't actually hit a losing streak if you have that kind of a scenario. Obviously, we're not saying we have a 100% win rate. I'm just giving an example of giving an extreme example, so it's easier to understand what we're talking about. So you basically see 2 extra signals, 2 to 3 extra signals coming in from MR3. And you'll see an extra 1 to 2 signals every now and then. There'll be 2 signals, but 1 to 2 signals coming in from CS. And what this will also allow us to do is to release the next update to MR1 and MR2, where the number of signals are going to go down slightly, but your win rate is going to go up, in some cases substantially. Like over the past week, over the past month, actually, MR2's win rate would have climbed by 4.5%, I believe, if this new change was in place. But the volume would have gone down by about 30%. So once again, the new update to MR1 and MR2 will eliminate some of the bad trades, basically. Okay, so volume goes down, but win rate goes up. Okay, and what we're trying to do is basically make sure that the variance is more controlled, and we try and stay around that win rate, so we have very few losing days, because that's really what we want to avoid. We want to avoid losing days. Okay, so that's all that's going on our side. Now, because of this, we can actually run pretty good analysis, right? We can look at all of our numbers. So I can say with great confidence that this past week, for example, if you were taking the signals and you were taking the live session trades, we'll talk about live sessions in a second, then you had to be profitable unless you were messing up the money management or were taking an extremely high number of trades. One of the things I've noticed, and I have actually spoken with quite a few members about this, is there are a lot of people who go, well, I took the signal, but then it went down, so I took it again, and then it went down more and took it away again because I thought that I'm getting an even better position in the split, right? So it would be a situation like this, where they took this, and then they took this, and then they took another one and another one. There was actually one person who had taken 6 trades on the same signal, which is not advised at all by us. Okay, it's not advised at all. It's not worth it. That's not how you do it. Okay, so please review the risk management videos, money management videos. If you just stick with that, if you just follow along, I know it might seem slow to you guys at first, but now let me give you some really neat little numbers. If all you did was took live session trades and CS trades, okay, if that's all you took in 1 month, at the end of that month, your account balance would be up by 71%. in the past month. Okay, I'm talking about the last month's data. In the last month's data, if you followed our money management and you took every trade was only 1.5% risk, and I'm not talking about you taking splits either. I'm just saying you follow exactly what happened in live session, and you just simply took this trade right here, not even the split. If you just took this trade right here, you would be up by 70% on your account. Okay, so it may seem slow to you guys. It might sometimes seem like it's not exciting enough, but you could be doubling or tripling your account values very, very quickly, even with sound money management. So the sound money management is very important. That's the thing that keeps you from blowing your accounts. Okay, so make sure that you stick with that. All right. So let's make sure that we do that. The other thing is, where do I take all these signals at, right? Because one of the other questions that comes up is, well, not all of these signals are available all the time. And that's the whole issue why we even have to give you other brokers, right? Because we recommend only Nadex. We are like, work with Nadex. They have the liquidity. ISG Group backs them. CFTC has approved them. They have to pay. There are no problems there. There are no issues there. But the reason we even include any other brokers is entirely because not all of these signals are going to be available all the time on Nadex. But you have to also understand that you don't need to take all of these trades at Nadex to be very, very profitable. You can take, and again, I just gave you guys an example. If all you did was live sessions and all you did was CS trades, that is all you did nothing else, you would still be extremely profitable. And in the same breath, if all you did was took MR2 trades on Nadex this past week, the analysis I had run on that was, again, not splitting. If you're only just taking the trades themselves, then you would still be up by 32% on your account. So that's still a very, very good thing. Now, from the people who are trading heavily right now, you are able to find a lot of these signals on Boss Capital, which is a tech financial platform, but they are unregulated, just letting you guys know up front, just like we make a note of on our brokers page. G options will have somewhere around 30 to 50% of those. Now, if you're international, go with option trade because they're actually regulated, right? They're a spot option platform and they're regulated. But if you don't have a choice and you have to go with one, then you have to go with an unregulated one, unfortunately. We, again, emphasize that you should stick with Nadex because I think that's honestly not just because it's the regulated one. I'm not just saying this because it's legally the right thing or ethically the right thing. I'm telling you guys that because it's honestly one of the most profitable platforms because the way the payouts work on there, okay? Next thing is that we are actually going to now, we've converted everything. We've changed something in our infrastructure yesterday, which, I mean, you all got the email for this webinar as well. So we're going to actually start sending out emails for every signal that is 1 hour or more. We will not be sending out emails for turbo signals. Okay, the TMR signals, we won't be sending out emails for those because by the time you get the email, look at the email, go there, you would have missed the trade anyway. That's just a 5-minute trade. But we will be sending out emails for every single one of these as well. Plus, our app is already sitting in these in the Google Play Store. It's already sitting in the Apple Store, but we cannot push it and we cannot actually change the name on it and make it live until our NFA application is approved, just because of our size. We get classified as financial information. So this app has actually been sitting there since March 31st, just like we said. We're just waiting for the bureaucracy to give us the go ahead, and that's all we're waiting on. Okay. All right. So that is basically what's going on with the algorithms and all the cool updates happening over there. So if you've been profitable so far, you're about to become way more profitable. If you have not been profitable so far, please check your money management, make sure you're not over trading, and then focus on becoming profitable this coming week. Okay, so this one little section is done. We're going to talk a little bit about live sessions very quickly. The live sessions this past week, I think, went 15.5. Is that the number, Josh? Can you confirm? I think it's 15.5 just from the top of my head, which is a 75% win rate. Yep, so we had a 75% win rate once again. I think we had the first losing session so far. We had one session where 2 trades were issued, which both lost. And that's the only unprofitable session that has happened. Again, make sure that you're actually following what's happening in the session. Once again, I actually got to observe somebody, I actually got to observe 2 people who would just keep entering random trades at random split times. You're like, oh, he said it's going to go down, but it went up. I'll enter again. And you don't do that. Wait until somebody from our trading team who's looking at the chart says, okay, this is where we will enter the split, or this is where I'm going to be entering the split. And that brings us to the nomenclature. So one of the things you will notice is that the traders in there will say, may enter a split at 780. Okay. Now, that might be a little confusing because you'd be like, does he mean we should, or does he mean we shouldn't? It might happen, might not happen. That's really because of that's really just a straight up legal requirement. It's just a nomenclature of it. We're not allowed to tell anybody, oh, you should definitely take this trade, or you need to take this trade, or something like that. Okay, that's just a linguistic thing. So what we're doing is we're clarifying this. We will basically, we've instructed the trading team that everybody on our team is going to now use a phrase. I will be taking a split at 780 or whatever. Okay, and that basically lets you know that that's what the trader is doing based on his analysis. If you would like to, you can take that as well. Okay, that's all it is. I understand it was slightly confusing to some people, but that's why it's said the way it's said. Okay, now the other thing we'll be doing is we will be issuing chart pictures. We'll be issuing some analysis of the trade. We'll be issuing some images of here's what's going on in the market right now. And I highly encourage all of you, especially if you're enterprise members, go ahead and set up your charts just the way that it's taught on NetDania in the enterprise training. Set up your charts like that and follow along during the live sessions. Okay, go ahead and set up those charts for those currency pairs and observe what's happening at the M15 and the M30 and the 5-minute intervals. Take a look at what's really going on there, and you will begin to see exactly why the trader recommended what he did. Okay, we don't have any special information with us that gets us the 75% win rates either, right? It's really just based on that analysis. So you guys can just follow along, combine the enterprise training with the live sessions. We'll be issuing what's happening in the chart and what we're looking at, and you'll be able to learn from that and do that as well. Okay, so that's one of the beauty of another little quick change that I made is now whenever a message will be posted in the live session, there'll be a little beep that will go out, so you know that a new message just appeared in your live session. That way you guys can actually be doing something else or looking at the charts, and you will hear when there is a new message, just like you kind of hear from the signal, but it's not going to be as annoying of a tone. Okay, it's going to be like a Facebook chat message or a Gmail chat message, something like that. Okay, so is that clear about the live session? Is everybody happy so far with the live session? Actually, who has been doing the live sessions so far? And there you go. Yes, tons of people. See, this is the thing. So one of the discussions that Josh and I often have is I love to brag about our members because you guys are the most grounded, most patient, and actual real action takers, right? Because a lot of the times you can put out the best thing in the world and people just don't do anything with it. And Josh, I think, has been very thoroughly impressed by everybody's character as well. So so Josh, please, I would love for you to praise everybody because I just feel great about it.
You guys are fantastic, as is Hitesh.
No, not me. Go ahead and read from the script I gave you about how great everybody is. And so, no, I'm kidding. There is no script. We're just honestly really happy. Okay, that honestly it's just very exciting to see, and we don't have to beg people, be like, did anybody make money today? Like, people just love posting their results in the Facebook group. People email me about it. People will post me about it. It's just awesome. So it's really, really exciting to see all of that. So live sessions, the final thing is that we are in a lot of discussions. We are trying to get one more session going at a different time. Unfortunately, you have to understand that the times are defined by the market itself, right? So the Asian trading session cannot be held during the daytime in US because that's not the Asian market time. So the Asian trading session will have to be held at the time that it's held right now, but we're going to try and include a different session at a different time for a different market with slightly different strategies and so on. And we're actually starting a test on that right now. I'll be testing over the next 2 weeks. I'm going to select 10 to 12 members, and we're going to be testing a second time, which will be during the daytime in US. And so then that way we'll have 2 separate sessions running. So a lot of people can attend a lot more sessions, and hopefully that'll go well. Obviously, this is dependent upon it being profitable, right? The final goal is being profitable. If it's not profitable, then we're not going to do it. But if it's profitable, then we will definitely make it live. Okay, now we'll be making live also the live chat support. So Josh, maybe you should define this a little bit more, because basically our legacy members, you will be able to chat directly with Josh and other people on the trading team whenever you have a question or you're trying to do something and you're trying to understand what's going on. So Josh, maybe you could talk about it a little bit, talk about that a little bit. And then there's actually a little side thing that we didn't discuss before that just came in my mind that we should also go over. So can you give us some direction on what people can ask you for and what should be the communication and so on?
Yeah, absolutely. So at the very basic level, when you guys are receiving signals, whether it's from the live signal session or especially during the day, sort of 8 to 10 a.m. GMT onwards, covering the US session, you probably have a lot of questions. You know, should I take this particular signal? What was that news that just came out? What caused this large volatility spike in this pair? All of this is information that myself and our team of 1 or 2 other senior traders are there to assist you with and answer your questions. What we won't be telling you is to invest here or trade there, but we are there as a support function. If you're not sure about a particular trade that you have found yourself, for some of you that are becoming more autonomous traders that are trading by yourselves, not relying on the signals, we're also there to help you nudge you along in the right direction so that you generate profitable outcomes. And for those of you that are, of course, relying on the signals, which is absolutely fine, we're also there to do a sense check on the signals. And this should be running pretty much most hours of the day. The schedule still needs to be kind of ironed out, but that's the type of service you'll be getting. And Hitesh, presumably I can see you've written waterfall, so this has to do with the advanced indicators that will be going live, or should we touch on that later?
Yeah, let me explain why I put waterfall there. So one of the things that happens is, so the enterprise training, the 5-minute rapid reversal is a very, very strong system. I mean, people have done very well with it. There are a lot of people doing very well with it right now. The only concern with that is, once again, the lack of discipline in some cases, because people will take a trade and then it keeps going up and they'll keep taking trade, or it'll keep going down and they'll keep entering new trades over and over, instead of backing off and saying, okay, this is, you know, I took a trade, it lost, now let's wait for the new condition to arrive. So there is an indicator that actually coordinates very well with this, which is called the waterfall indicator. Now, we haven't made all the indicator scenarios live in the back office because I think it would confuse members right now more than anything else. But what I was thinking of doing is, the only real challenge to the rapid reversal strategy is a situation that we call a waterfall. Okay, and a waterfall looks something like this. What happens is, you see, I'm going to put this in red. So let's say the market is going down. Okay, and you say, oh, I'm going to enter this trade, okay, and then it continues to go down, and it's kind of this very managed descent down. Well, it should be actually like this, and this is kind of what happens. And what people end up doing is, they'll enter a trade here saying it's going to go up, they lose that, and they'll still enter another one here, another one here, another one here, and some of them unfortunately also will martingale on this. They'll enter this trade with $10, and they will enter this trade with $25, and then they will enter this trade with $65, and so on and so forth, which is a terrible strategy, because it just takes one bad losing trade to completely wipe out your account. Okay, so your risk of ruin is very high using that strategy. You don't want to do that, because that's not really a strategy, that's called gambling. So what we are trying to do is that we will say, right now, this particular currency is in a waterfall. So when you're doing the rapid reversal and you see this happen, you see a trade scenario, let's say over here. If the indicator says at that time, let's say this chart is for USD JPY. If the indicator says to you, in enterprise, we'll have a constant feed running, and in enterprise, it will say USD JPY is in a waterfall scenario, then you will not apply the rapid reversal strategy to it. Okay, you will only apply it when you don't see the waterfall on this. So it's basically one little check for you to stop you from accidentally entering these trades that are bad. Now, of course, if you did enter this trade, let's say over here, okay, you enter the trade here and you lose, just have self-discipline to move on. Okay, don't keep entering over and over, because sometimes these waterfalls can go for very long times. I mean, and they can continue for 8 or 9 time frames, 8 or 9 bars in a row, and you just don't want to risk it. Okay, so that's why this little addition will kind of help you on the enterprise side. Those of you who are doing the 500 rapid reversal strategy, that will help you tremendously as well. That'll help you avoid this. As a flip side, when you see that something is in a waterfall scenario, that will also help you wait up, because on Nadex, you will wait for the, you can take a contract and wait for the waterfall to end. You can wait for it to bottom out. And when you see at least 2 candles have, reverted, the market has reversed, and you still have the conditions being met for the 5-minute rapid reversal, that would be a very good time to get a contract that is a significantly higher price up, so you can get the contract for a very cheap price and sell it for a profit. Okay, so that's kind of what we were thinking. We're gonna, if you didn't understand all of what I just said, because that is slightly more complicated, it's hard to show this, without doing it live. We will put out training on all of this stuff. We will actually show you exactly what we're doing. But in general, if you understand the 5-minute rapid reversal and how it's done, all you're doing now is you're checking, is this in waterfall? Yes, then I won't do the 5-minute rapid reversal. If it's not in waterfall, then I'll do it. That's basically what that will do for you. So that's basically it. Now we're going to go ahead and get going on some actual analysis of the signals this past week. So you could see when we should have avoided the signal. You can see how you would have entered the signal at a better price and so on. This is the time that everybody is actually on the webinar for, because this is when Josh gets the screen and I get to shut up and you get to listen to his very refined, dignified UK accent instead of my third world one. So here you go, Josh. I'm handing you the screen.
All right, thank you. Okay, please let me know if you can see this.
Yes, everybody can see it.
Okay. Right. So this is the AUD JPY 1-hour chart. This is a GMT time. So if you can just point me out the time the signal fired, happy to analyze it.
Yep. Okay. So you're on AUD USD, you said, right?
AUD JPY. So, yeah.
AUD JPY. Okay. So let's find the AUD JPY.
Or maybe just tell me any signal any particular signal that you wanted to analyze. I have a list of pairs.
Let's go ahead and analyze on USD JPY. The USD JPY at 16 GMT on the 24th.
Okay, one moment. At 16 GMT. Yes, I see it. Yep.
Okay, and our entry was it was a call. The entry was 118.981.
0.981. Got it. Okay. Yep. And this was MR2?
This was MR1.
MR1. Okay. All right.
And it won going forward. Although I think on the chart it looks like we lost it, but we actually won it.
Right. Yeah, I think maybe we got lucky on this one because the signal fired slightly late, so we didn't actually get the opening price of the candle. We actually got slightly below, and that's why we got lucky on this one. It was a very close win, right?
No, actually, I think maybe we're looking at the wrong time, because the expiry time was 119.046.
119.046. Okay, so it was okay. So
maybe we might be an hour apart, because you might be looking at UK GMT versus GMT.
1 moment, please. Could be okay. So you're saying the signal. Okay,
I think it was this
one here. So
yeah.
the signal ended. Okay, and it fired here or it ended here, so it expired in the money?
Yeah, it expired in the money. It fired at 118.981.
Yeah, okay, makes sense.
Yeah, I think it was the open of this candle.
Got it. Okay.
So I think your charts are an hour ahead. Okay, so when I said 16 GMT, you should be looking at the 17 candle.
Okay. Okay, so here, this is a traditional example of an MR1 that one. And there's a very easy way for you, when you receive the signal at the end of this candle, what you see here, this red candle here with a very large wick that has bounced off this lower Bollinger Band, which is known as a resistance. This is the previous candle, right? And then the signal was fired at the beginning of this candle. And this was a no-brainer call entry. You had every reason to enter the trade and not avoid the signal. The reason behind that is, firstly, look at the time. Okay, so it's 16 p.m. GMT or 17 p.m. UK time, or in Eastern Standard Time in the US, it's about 12, right, in the afternoon. And by that time, a big portion of the market, believe it or not, has gone to bed. They've gone home, right? When London closes, 40%, 45% of volumes in the market drop. So any big trends that you see going into the closing of markets are likely to face some degree of retracement, right? And this is what the MR1 signal tries to find. And in this case, the biggest telltale sign here was, look at the previous candle, right? It bounced off the lower Bollinger significantly, it leaving a very large wick and a very small candle body, indicating that in the very near term, and that can be anywhere from 30 minutes to up to 2 to 3 hours, there's going to be some degree of bounce, right? So when this MR1 signal fired, all you would have seen at that point is this red previous candle that's resisted the lower Bollinger, and it's actually bounced up, or it's created this hammer formation, which means that the next candle is probably going to continue north. In this case, it did, right? So you see here, you would have entered where my crosshairs are, 118.981, as Hitesh said, and you would have expired about 6 to 7 pips in the money. Okay, and the interesting thing there is that statistically, in our back tests over 3 years, the pips, the spread that you will win these MR1s by when they win is about 7 to 8 pips, right? So this is very much in line with the theory as and obviously now in reality. So this is a classic winning example of MR1. Is that all right, Hitesh?
Yep, that's it. And interestingly enough, I was just checking, there was an MR1 fired on the candle before this as well.
Right.
So we had another signal that came in on the USD/JPY at 15 GMT, which would be 16 on your charts. I think that was probably fired because it bounced off of the Bollinger. And a split algorithm picked up that it was probably going to go down.
Exactly. So in the split algorithm that Hitesh has engineered is obviously it's a great risk reduction tool, which we certainly urge you all to use on most signals, if not all. And the interesting thing about the underlying algorithm, so Hitesh just said that it fired here as well, right? But had you immediately entered the trade, you would have unfortunately lost that trade by a pip or two, unless you took the split algorithm price, in which case you would have been deep in the money on this one and also deep in the money on this one. The interesting thing about certain MR1s, not every MR1, but certain MR1s on certain currency pairs, in this case US dollar, Japanese yen, it will fire the first MR1, and if it loses, which in this case it did, it will fire a subsequent one, which actually gives you, statistically speaking, close to a 78 or 80% chance of winning. And that's just conditional probability in play there, right? For those of you that are math buffs. So basically, MR1 does use probabilities, and if the conditions are right, it will fire a second signal. So I guess, Hitesh, there are 2 ways to play this. One is just when you receive the first one, just take a very small bet on that, and should it lose, on the subsequent one, if it fires, take a slightly bigger trade on that, the split, or just wait for the split algorithm to activate and take that, right?
Right. Well, let's ignore the split algorithm for now, though. Okay, let's do it this way. Let's pretend that it's 16 GMT or 15 GMT. Okay, it's this candle, the hammer candle. Let's say this candle has not yet happened. Okay, so we would be looking at the previous candle. In this scenario, would you enter this trade?
I personally.
It's a call for USD/JPY. Would you have entered it?
I personally would have, yes. And the reason behind it is that at this point, the market is in its final minutes, the London market, which means it's very likely that the next few candles you're going to get some degree of retracement. After such a, it's a relatively powerful trend, right? Almost 70, 80 pips drop. This formation here, by the way, overall is known as a channel surfer, which you'll be later getting in your training. But the key thing here is that I personally would have entered this trade. But that's assuming I hadn't seen this candle. This candle here is a classic telltale sign that the candle after that will be a proper retracement. In this case, you had a nice big green, right? So, but you're asking me, had I not had any information about these candles here, I would have, because look, it bounced off the lower Bollinger, which is a resistance. On top of that, it's after a significant fall, and the markets are going into sleep mode. I won't say sleep mode, but the biggest markets are shut. Can I show them a slightly different Bollinger period for those that want to be a bit more
25.
Right, exactly. So what you see here, for those of you that are already using Bollinger Bands, is notice on the 14-period Bollinger, which is more sensitive, and the 3-period standard deviation. If I change that to 25, oh well, okay. In this case, it was also telling me that actually it's a good resistance. So Hitesh, in answer to your question, I would have gone call here. Yeah. So it was a good. There was every reason to go call at that point. If this was during the day, no way, right? Because you can see news here as well. But if this was sort of 2-3 hours before, and you see this large red candle down, that normally indicates that you could get further weakness over the next 2 or 3 hours. That typical waterfall that you drew, that can happen. But because it's towards the end of the trading day, I would have gone call.
Got it. All right, let me address one thing, and this is why I even said, let's not even count the splits all the time. So because here's one confusion that I want to address really quick, and then we'll continue with more analysis in just 1 second. Okay, so can you guys see my screen? I'm going to show you the table here quick, okay? So I actually clarified this point once earlier, and I want to clarify it once again. So the blue means that the split price that was predicted would have won, right? But we still count that a loss, okay? So I want this point to be very, very clear. So we know actually, for example, on Friday, when these signals came in, every single one of these, there was one that I think did not hit, but every single one of these split prices actually was achievable. You would have actually entered at the split price and you would have actually won those trades, right? But we still count all of those a loss for us, okay? Even though these were all wins, clearly. Because there are also instances where we would have issued you the split price and the split price might have never been hit, right? Because just like anything else is the prediction of future, and it might not have actually been hit in that scenario. So to be on the safe side, just so that we don't pretend like, oh, we won this when we didn't, we actually count every single one of these a loss, even when we win, even when we lose. And that's just because we don't have, our algorithm isn't smart enough right now to say, oh, was this price actually hit or not, right? All it can tell you is, did it end below or above the strike price? Because we're just looking at the beginning and expiry times. But eventually, we'll get to the point where it'll actually be able to say, oh, this split was hit and we won, and it'll count that a win. And if the split was not hit, and in that scenario, it would count it a loss, right? But right now, to be on the safe side, we count everything a loss. So if you actually just looked at our statistics in here for Friday, I know majority of the people won like 15, 10, 20 trades, all sorts of crazy numbers. I personally, on our system, we won majority of the trades. But if you just look at the table, it would have said that we lost most of them, right? I mean, it's just us being more transparent, being strict with ourselves. So if you see a scenario where the split wasn't hit, don't be confused by that. Don't be like, oh, the split price was never reached. What should I do in this scenario? Does that count as a win or a loss? We just count it as a loss all the way through. So the statistics that we were giving you, the 64% and the 13 pip victory and 85% win rate and things like that, all of those things are not based on, oh, we are counting the splits as a win. They are assumed, all of them are based on us assuming that these are losses. Okay, it's something like this. Okay, so many of you are also doing the DST side e-commerce stuff, right? So one of the things we do there is if you're evaluating somebody's account, if you made a sale, but the sale was unprofitable, we're not going to parade it around and be like, oh, look at this, we made a sale, so great, because that was still a loss, right? So it's the same thing over here. We're trying to be stricter with ourselves. We don't want to actually pretend like it was a win if you would have lost the original strike price. Okay, so I know majority of you actually won all of these. I know that because I was seeing the results. I've seen the trading that our own system did. I can look at all of that stuff, but we are still going to count those losses because that's a future prediction, and that sometimes does not happen. Okay, now in the future, like I said, that will be more advanced, and if the split wasn't hit, it would show it in red. If the split was hit, then it would show it in blue, and then it would count as a win, right? So our actual numbers, our net numbers would go up dramatically. So if you just look at it right now, it's like 12-8, but if you look at it with splits, it's 19-2 or 19-1, something like that. So just understand that that's the position with the splits. I'm not at all saying that you should trade based entirely on the split algorithm. Your trading should really be done based on the original strike price. The split algorithm is very useful. It is very accurate. It gives you a very good idea on what to do, especially on the Nadex side of things. But when we do this analysis, and when Josh is going to be doing all of this analysis, we're going to use only the original strike price, and we're only going to see whether we would have won that or lost that to help you make better decisions on entering the trade or not entering the trade. Okay, so I'm sending this back to you, Josh, and you can get going. Oh, and somebody's asked about the 2 decimal points. They were like, why is this 2 decimal points instead of 3 decimal points and so on? That's because the last decimal place is just 0. So 97.720 is the same as 97.72. That's all that is. So here, Josh, I'm sending it back to you. We're going to look at a couple other, we're going to look at a few losing trades now and see if there was a way to have avoided those. Okay, so let's look at USD CAD. That's an MR2. Let's look at, that was actually the only losing MR1 that I have. So let's go back to a previous date. Okay, so we'll go back to the 23rd. Right.
Okay.
I'm just waiting for it to load. Give me 1 second.
Sure.
All right, here we go. So let's look at the 23rd at midnight GMT, basically at 00. But in your case, it should be 1 o'clock.
Okay, so this one here, right?
And this is for NZD-JPY.
NZD-JPY. Okay, 1 second. Okay, it's presumably this one, and it was fired a call. Is that right?
Yes, this was a call.
Okay, and just to be clear, the opening price that it got was something around 91.649.
Yes, 91.646. It was fired 3 minutes into the hour, so we got 91.646 and a call on it.
Okay, so basically, this one lost by an absolute mile, and again, luckily for us, the telltale signs were all over. So you would have received the signal after the close of this very small candle here. It's a tiny candle, right? And essentially notice that the previous candle is hovering well above any resistance, as is the previous candle before that, and as is the previous candle before that. And based on this analysis, and given the time of the day, we're talking really slow markets, barely any liquidity. Japan has just opened, and so has Australia, but 70% of the players in the market, you know, the Europeans, the Americans, and all those, they're asleep. So these are tricky market conditions. you need liquidity, you need fuel, you need these players there to drive a trend up. And what you're seeing here going into this signal is that there's a waterfall going down, right? Firstly, there's a waterfall, the dangerous formation that Hitesh was talking about. And on top of that, none of these candles have actually resisted the lower Bollingers, right? Remember, I was talking about these lower Bollinger Bands act as resistance points, right? Do you see any wick here or any wick here? No. And it's a waterfall. And so this was a poor signal because it told you to go call, and it's kind of a no man's land. And look, lo and behold, it actually fell down sharply. You would have lost the signal by almost 30, 40 pips. Okay, so in this case, you would have probably not taken the signal, especially now you won't, given that you have this additional knowledge. When you see signals like this at these weird times of day, and also that you see no resistance being respected prior to the signal being launched, and you see a waterfall, best to just avoid it.
Yep, and it's a no man's land.
Is that right, Hitesh?
Yep.
Exactly.
It's basically no man's land. When you look at something, it's basically we're looking for overbought. These are all mean reversions, right? So mean reversion means that it's either overbought or oversold, and it's going to come back. So there's actually another thing that you notice when you would be looking at this candle. You see how the Bollingers are already pointing downwards as well.
Exactly.
They're actually moving in a trend. You see both the lower Bollinger is actually going downwards already, and then it actually accelerates after that. And the another sign is that you see this this tiny candle that you see there. You see that there's a wick. There was a market movement. There was an attempt by the market to actually move the price up, but it failed, and the market actually went back down, which means there's currently a strong momentum downwards as well. So the Bollingers show there's a momentum downwards. We're in no man's land. We're nowhere near the lower Bollinger. And we also have the previous candle showing momentum going downwards. So you would have simply not entered this trade at all. You should have just avoided the trade and not taken it whatsoever. And then actually, we then fired a second MR1 signal on the next candle. So when the next candle closed, we entered a new one at 2 o'clock your time.
Yep.
Yep. And this one was another call.
Yeah. So this was again one of those examples where the system calculated that the trend has come to an end, and given the first loss, the likelihood of the second consecutive loss on the same pair would be just 20%, very low. But again, in this case, you can see that, and Hitesh, for what it's worth, I would have...
No, yeah, I would have taken it. Just a second, Josh, I think I'm mistaken. The two trades were the candle that we just analyzed and the candle before that. So you would have actually avoided both of those trades. The two losers that you had were at... Right. Yep, they were actually because you're an hour ahead. It's this trade over here, which is the exact same scenario. No man's land. It's not touching the lower Bollinger. It's nowhere near that the support. It has not resisted the support yet. It's also just kind of hanging around there. We have no idea what's going to do. So you would have avoided taking this trade altogether. You shouldn't have taken that at all. You can also see from the RSI that the RSI was nowhere there. Exactly. Right. So this is not a condition of oversold market where there is too many sellers, or it's been oversold, it's not representing the right value, so now it'll go up. That's not what's going to happen. So you would have avoided this trade, and then we just analyzed the second candle. You would have avoided that trade as well, and these will be very, very easy and straightforward to see. In fact, you could have seen these just by clicking on in the currency pairs, right? The chart that opens up there. When you would have clicked on the currency pair, it would have shown you this, and you would have immediately said, "Oh, I'm not going to enter this. This is not a good trade at all." So the first two trades would have been not taken by our system. We would have just avoided those, and therefore those two losses would have been skipped by you. Now after this, another MR1 trade for NZD-JPY was issued at 3 GMT, which would be 4 o'clock your time. So if you can go to the 4 o'clock trade, it's that, yep, this one. So there's a trade issued there at the next candle. So the green candle, it was a call and we won it.
Yeah. Correct.
And this one, now you can actually see there's exhaustion setting in. You've seen the lower Bollinger has sent the candles back a couple times already.
Yeah.
And then the 3 o'clock candle that you see over there, Again, it's a small candle. It tried going down, but then it closed higher than where it was, and then this one wins. For what it's worth, you could have skipped this one if you wanted to, honestly, because it's not the super strong thing. But now you actually have a significantly better understanding. You can see that there's a better shot of this coming back up. So and you can see the RSI is definitely in the overbought levels as well, oversold levels. Sorry.
Exactly.
So by the way, guys, everything that you're seeing on here, you can replicate this entirely on Nettania as well. Okay, the whole thing can be replicated on Nettania. You can actually do the exact same thing. Just the way you set it up for the rapid reversal strategy, you can set up the same thing on Nettania for just change your Bollinger Band, set it to 14.3 or 25.3 if you want to review them, and just change your RSI setting to 9, and you would see the exact same thing that Josh is showing us right now.
Exactly.
All right, so let's look at one more loss on MR1. Actually, we had no other losses on the 21st in MR1. We had no other losses on the 22nd in MR1. So we have to go back to the 21st, which is a good feeling. Actually, we didn't have any on 21st either. So we'll have to go to the 20th. Our next loss on MR1 was on the 20th,
right,
which is Euro JPY.
Okay.
And it issued a call at 20 GMT. It'll be 21 your time. It issued a call at 128.044.
120. Okay, so
at 21 there.
Okay, over here, correct?
Correct. Yes. At the open of this candle, it issued a signal for a call, and that did not pan out for us.
Yeah. Okay. So this one here is I'm glad we finally got one which is unexplainable, because everything we can explain away, then we just see everything seems great with hindsight 2020. But so here, the time again is 20 p.m. GMT. That means a good portion of the markets are asleep, or they're no longer at their trading desks, and the last few hours of the U.S. are playing out, which means liquidity is low. Any large moves up or down are likely to be retraced quite quickly. So the MR1 fired here a call, and it unfortunately lost here. And if I would have seen the trade here, I would have personally taken a call, and I would have lost the trade. The reason behind that is staying true to the information that I was giving you earlier. Look at the previous candle. Okay, it's resisted the middle Bollinger. And even the candle before that has resisted the middle Bollinger, which basically means that a small reversal in this larger downtrend over the last 1 or 2 or 3 hours is likely. So we should have gotten a few green candles here. Instead, we got them 1 hour later, right? So eventually you got this retrace up, but it just started an hour later. Now, technically speaking, there is probably nothing you could have done unless you're looking at overbought and oversold indicators and you're seeing, well, actually, hang on, this is a neutral RSI territory. I'm not touching this signal, right? So to give you some comparison, if this was fired somewhere over here at a lower Bollinger, the RSI would have probably been oversold anyway, giving you more conviction to enter the call. Whereas here, it was not only far away from the lower Bollinger Band and the upper Bollinger Band, which are known as resistance levels or extremities, and they hold price, they contain price better than a middle Bollinger Band does. But nevertheless, if I look at the previous 2 candles, I'm seeing here that both candle bodies have resisted the middle Bollinger Band. A rational trader would effectively say, okay, I received a call signal, I'm going to go call. I lost. Now, the one thing that can explain this loss is something known as position closing or position offsetting, which tends to happen towards the end of the U.S. session closing, and that's smack bam where we are right now, kind of 20 to 22 p.m. GMT, final few hours of U.S. trading. You get one big player, one investment bank or hedge fund or sovereign selling a whole bunch of euros or buying a whole bunch of yens, and you can get this downtrend move. It doesn't mean that this is going to continue. It just means, unfortunately, towards the end of the hour, you got a bad end-of-hour effect. And the reason I say that is, do you see this wick here? If you can see this wick here, it's quite possible that during the hour you were in the money. right? You entered your trade here. Hitesh, remind me the price. It was 128.044.
It was, yep, 128.044. That's it.
Okay, 044. So during the hour, you would have probably been pretty excited that, okay, it's at 078, almost 08, 4 pips in the money. And then towards the very end of the hour, when positions are normally closed in the actual currency markets, I'm talking about the binary option markets, you had one big euro seller that unfortunately resulted in a big move down. Right? And this is known as the end of hour effect. It's very prominent across the markets. And immediately, look, because it was not driven by news, it was retraced in the next hour. You had a very sharp upward movement. Hitesh, does that
Makes complete sense to me. But you know, this is kind of the point. Once again, for this trade, let's simplify it a whole lot more and put it this way. You are not going to have all of Josh's knowledge, and you're not going to have all of this information necessarily when you first look at this trade, right? You would have looked at the candle. Can you put your mouse back on that candle?
Yeah,
where actually, yeah, put it on the candle for 20, because when you would have been looking at the trade, that's all you would have been looking at. You would have been looking at that one candle, right? And you would have seen that we are somewhere in the middle of the Bollingers right now, right? We're not at the lower of the top. We're actually, this is the moving average of 21. Usually correlates very well with the middle of the Bollinger Band. And you're seeing that the RSI is in no man's land, and you would have done just as well to skip it. Okay, I would have actually probably just skipped it, because I would have seen this and I would have said, we're in no man's land. We will probably have another candle, or so. This is honestly how I would have thought about this. We'll probably have another candle where it's going to go down and actually hit the moving average and then bounce off, which is kind of what it did on the next candle. So I would have just avoided this trade as well. And this is kind of the point. What we are trying to do with the new changes in the algorithm is we're trying to avoid some of these kind of scenarios, right? We're trying to make sure that these scenarios are never even issued as a signal to you to begin with. And so you will naturally see lower number of trades, and you would have to do less analysis over time. That's what we're trying to achieve, that you have to do less analysis, and all of this is pre-done for you. And when the signal comes in, you can be assured that, yeah, it's probably already bounced off, or it is going to bounce off of the lower Bollinger before the call is issued and so on, okay? But basically, I would have looked at this. I would have looked at that one candle, because that's all I would have looked at, right? Before that, I would have looked at that and said, it's kind of in no man's land. It is kind of trending down a little bit right now, and it doesn't really have any of the main characteristics that I would be looking for. And it's not oversold in the RSI. It's not bouncing off of the lower Bollinger. It's kind of just hitting the moving average at that point, which has proven to be very fickle to me in the past, so I don't really trust it as much. And that's what I would have done. I would have just skipped this one. And you could say that more of a gut thing necessarily. So far, out of the losing trades that we've analyzed, there is one losing trade that I would have taken, which was the USD JPY trade that was on the 24th, which we ended up winning. Majority of our users ended up winning anyway because of the split and how far down it went before bouncing up. But for majority of the time, you would have just simply skipped these losing trades anyway if you did this very quick analysis. We are drawing it out because you want to explain to everybody what's happening, but if you just looked at the picture, okay, think of this in a very simple term. A ball is thrown. If it has not hit the floor yet, it's not going to bounce up. So you're just waiting. This is the trajectory of the ball. It hasn't hit the floor yet, so it's not going to bounce up. So you just leave it be. And that's basically what we're trying to do. So when you actually internalize this information and you look at these trades yourself, you can make these judgment calls very quickly. It's going to take you maybe 3 to 5 minutes to analyze it. You know what? It won't be 3 to 5 minutes. It'll be much less than that. It should be like a few seconds. Well, it looks like MR1 had a pretty good week overall, because that was the last loss that we had. For the next loss on MR1, I have to go all the way back to the 16th of April. Should we analyze a couple MR2s if you're up for that?
Yeah, absolutely.
All right, so let's look at a couple of MR2s that are recent. We will go to the 24th. Let's look at the GBP USD, because we haven't really analyzed a solid one with the USD as the relative denominator. So let's look at GBP USD on the 24th at 8 GMT.
Yep.
and it'll be 9 o'clock on your charts.
This one here.
And we're looking at 1.5136 was our entry price. We issued a put, and it continued climbing up.
Yeah. Okay. So from memory, Hitesh, I'm going to cheat here a little bit, what happened here basically was, if I'm not wrong, the UK.
But we're looking at the 9. You should be looking at the one that's 9 o'clock on your charts, because this is 8 GMT. I think on your chart that's 9 GMT.
This one here, then, right?
Yep. This
so it was
here.
issued a put. It expired OTM.
Yeah, I would have actually taken this trade and just lost.
Yeah. So actually, what happened here, and this one's slightly unfortunate, is you were stuck in a breakout. And this here, when you see the Bollinger, the upper Bollinger Band is facing up, and the lower Bollinger Band is facing down. This is known as divergence. Okay, and notice that the MR2 was fired here as a put, but the previous candles were pretty decisive bull candles, right? There was always a tug of war between the bears and the bulls, and both were won. So it was a breakout. And more importantly, Hitesh, what was not shown here is that particular day there was British pound related news. To be specific, I think it had to do with the Monetary Policy Committee being slightly more hawkish on future interest rate expectations. It was a report that was scheduled, but it didn't show up on, like, for example, here in this Owanda chart. You can't see it. So if you had access to an economic calendar, it would have shown up. This is from memory. I recall this causing some pound strength, and of course, this continued into the next hour before reverting. So, whether this applies or not to future signals, key thing to note is that if you are getting MR2s or MR1s during news, you just don't trade.
Yeah. Yeah, I'm actually looking up
news effectively.
I'm looking up the news right now, actually.
And the thing is, news effectively throws out the window everything we know about technical analysis, right? So all this stuff about the previous candle hitting the resistance and making you go call or making you go put. When you get a breakout like this, when you get such a large breakout, look at this is a move of almost this is close to 70 pips, right? 60, 70 pips. So that's a pretty big move on the British pound USD. That normally is driven either by a big player, which anyways will take them a few hours to buy a certain amount of lots of that currency, or it's driven by news. So when you see this big, formation and you get an MR2, it could be that it's going to continue against you. So you stay out. All right, and not all news is always broadcast. That's the tricky thing. If I may explain further, look at the time when you got the signal. 8 a.m. GMT, that's smack bam opening of the European markets, right? UK opened as well. So big players get in there, and sometimes you get these very large moves that may or may not be driven by news. And in those cases, you just want to stay out of the trade. Is that all right, Hitesh?
Yeah, that's perfect. And that's the other thing too. One of the other things that we really want to do, and I have been trying to figure out exactly how to pull off, is making sure that we can account for news within the signals. Because if we can account for the news and not issue signals during news times and so on, then that would be pretty good. We actually have a filter built in on the options domination side, where when a signal comes in, and if there's a news item within 15 minutes before or during the course of the trade, when the trade would be active, then it kind of marks those signals. We ended up disabling that because some of the news doesn't necessarily have any major effect. And if you go out there and start accounting for every piece of news, then you'll skip majority of the day. So we're trying to figure out, we're trying to build up some level of sensitivity here where we can avoid issuing signals during certain times, and we basically have to go in and try and decipher then the news beforehand, which, as you can imagine, is one of the toughest things there is to do. So we are working on that, and we will eventually have that as well.
Yeah.
Okay, and then let's see. So let's talk about the difference between MR1 and MR2. They're both mean reversions. Okay, they're just looking for slightly different algorithmic levels of when they are issued. So you can actually analyze them in a very similar fashion, Mean reversion, like I covered in the video on the signals page, is basically means that it's an arranging market and we're expecting it to move up and down, right? So if it goes too high, it's going to come down. If it goes too low, it's going to come back up. And so we're looking for those particular scenarios. Okay. If you want to talk a little bit on that as well, and I'll give you one more trade in the meantime to analyze too. Okay, actually, you know what? There's another one. Let's do this quick as well, and then you can tell us the difference between MR1 and MR2. So here is a MR2. We will go with USD CAD. It's an MR2 that was issued at noon GMT, so it'll be 1 o'clock on your chart. The opening price was 1.21162. It was a call. And if you could take a look at that, please.
Was that which date? 24th?
Yes, this is on the 24th.
24th. Okay. All right. So here, this signal this was MR2, just to be clear, right, Hitesh?
Yes, MR2.
Okay. This is something interesting I'm going to tell you. Firstly, again, you don't take this signal. Main reason is you had U.S. durable goods orders data, and that came in different versus expectations. The forecast was minus 0.5, and it came in an actuals at 4. So there was a beat there, and this basically caused volatility in this candle. Unfortunately, this is where the signal fired as well. So you would have seen this big red candle drop, okay? And I'll tell you a little bit about how MR2 works and how it's different to MR1, and what I'm saying now will make a bit more sense. But you would have gone call, and unfortunately, you would have probably been in the money by almost 5 to 10 pips for a good portion of the hour. But then half hour into it, so half an hour into this, you just got news, and you got killed by the news, right? So this is another reason why you don't trade any of these signals during news. Okay, if this would have been fired at any other point, so excluding news and any other condition, I would have taken the call. There's no reason not to. Maybe I would have waited for a better price till it hit the lower Bollinger in the next candle. So I think the algorithm that Hitesh has engineered, the split algorithm, would have anyway told you to get in at a lower price. But most likely you would have won this trade anyway if it weren't for the news. So again, here, this is important news. U.S. durable goods orders, all eyes on the U.S. economy for this year for interest rate rises. So again, any sort of medium impact news can scupper your trade.
Yep, Josh, can you? Okay, so just so everybody knows, this is the Oanda web trader. It's the FX trader on available with Oanda. That's what Josh is using. In case because a lot of people are like, what's Josh using? I want to use the same thing, and especially that news integration in there. Maybe we will actually see if we can do a video about that and walk you guys through how to use the Oanda system as well. By and large, you have to go through a process of approval and so on. The reason we teach you how to use NetDania is because you can just go there and open up the charts and start using them. While with Oanda, you actually have to go through a process. You have to submit an application, get an account, and so on before you can do it. So that's why we didn't start out with this. But you're welcome to do this. Okay. There's one more little thing. Actually, Josh, can you do me a favor and switch from the 1 hour to 15 minutes or 10 minutes?
Yeah, absolutely.
Okay, and then let's go back to that particular candlestick, to that hour.
Can you just remind me this was fired here?
We're looking at the noon, so 1 o'clock your time.
Oh, sorry. Here, of course. Yeah.
Okay, and so I'll just tell you guys really quickly. Yep, so that's where the trade was issued. Okay, and I'll tell you very quickly where our split came from. Our split looks at maximum of 3 candles and tries to predict where one of them will hit. Okay, so it actually is trying to estimate a price that will bounce off the Bollinger. So if you just go down on the 3rd candlestick and look at where it bounced off of the price. Okay, so that's 1.2 what our split indicator looked at was the second candle, I believe, and gave a 1.21124 as the bounce off price, and that's why the split ended up winning. So I just looked at the second candle there and kind of estimated off of that that's where you should enter the split. Now note that it's not that a split was issued in the future. A split was issued the same time alongside the trade. So you have a lot of advanced time to figure that out. So you would have won that if you entered at the split price. But just letting you guys know, that's what the split system is doing. It's actually looking at 5, 10, 15, and 30 minutes for the next hour trades. It's looking at those time frames, and it's trying to predict within 3 candlesticks what's the lowest that it's going to hit. And that's why it can't be 100% win rate, right? Because there could be a lot of movement on the 4th candlestick or so on. So you will see the first candlestick is where the trade is issued, right? The close of the first candle, that's the 12:45 to 13 candle. It's looking at that candle, and it's looking at the 13 candle, and it's looking at the 13:15 candle. So if you were trying to figure out what's my best entry position, if you were trying to do it yourself, you could simply look at the shorter time frame on whatever the signal is. Just look at the shorter time frame and see if it's a little further away from the lower Bollinger yet. So when the signal was issued, you could have looked at it and said, oh, it's a little further away from the lower Bollinger, it's a little further away from the RSI right now. I can possibly get a better position on this. That's basically what we're trying to do. Again, a lot of the stuff that we are teaching you right now is about you applying your intelligence on these signals, and that will definitely improve your results right now. I mean, we just walked through it. You would have not lost any of your MR1 trades over the entire week. I mean, you would have basically had a 100% win rate because you only had those 4 losses, and you would have avoided those 4 trades, right? That's how powerful this information is. Now, like I said, we're trying to completely automate all of these things as well. We're constantly refining these signals to make sure that they are stronger than what they are right now, because one of our aims is to try and automate everything as much as possible so it's easier for you guys. We do have a news feed also available, which was made available very recently. You can actually go and see it. We're going to make it a little bit better because the format is kind of clunky right now. It's kind of cluttered. We're going to make it a little bit better for you, where you will be able to see, okay, on this date, on this, and this is where it's coming out. And I'm going to add a column in the signals table, which is going to say whether or not there's a news expected. So if there's a news expected, you can click on the news. It will show you what that news is and what the impact expected is. If it's a medium or high impact news, then you will not take the signal. If it's not a medium or high impact news, then you can continue on. So those are the plans that we have right now. I mean, a lot of the stuff that I just mentioned, we're putting this out next week. Obviously, with the new 2 algorithms and the new 2 signals that we are releasing next week, that alone should have a tremendous upward movement in your account balances as well. So that's the other thing. And then I'm changing the design actually a little bit as well, so that the signal table is easy to see. You don't have to scroll to the right to see everything on there and so on. Okay. Regarding the automated trading, so I have something that is working right now off of MT4, and then we have another one that's a web-based system that's also working off of an API. And Josh will actually tell you everything about it. Josh is the most negative person I've ever met regarding auto trading. So he can tell you all the challenges with auto trading, right? Because we can't put out an auto trading system that works with 2 brokers. Because if we have 10,000 people go on there and take a trade automatically, and the automated trade takes 10,000 trades, and you guys have, let's say, a 100% win rate on one day. Okay, let's say a magical, mythical day where everybody wins 100% of the trades on that one day. The broker will go bankrupt, and there will be severe issues dealing with that. So we're actually trying to do all these integrations with only regulated brokers, with only places that we know for sure there's not going to be a problem with the payout and things like that. And then we are trying to layer this up as an API with Nadex, where the signal gets converted into a Nadex ready signal, where it will quantify what contract price you should be purchasing, what your dollar amount buying the contract will be, and then there's some intelligence on it where you can say, I only want to enter trades where I can get a 500% return. I don't want to enter trades where I'm going to get a 100% return or a 70% return. I only want a 500% return or more. So then our system is only going to look for those signals where we expect at least a 5 times return, which means your cost for the contract has to be $20 or less. Again, that's very doable. I mean, I've done it before. I know I can do it manually. But when we are talking about doing this automatically, that's one challenge. But then when you're talking about doing this automatically to the tune of tens of thousands of people taking it together, and we have to be very cautious in the way we approach it, because it can cause widespread changes to happen very quickly on the broker side. And so we have to be very, very careful about those things. We have to work these things out in a way that is not going to break something. So I hope you can understand why we have to be cautious about this, why we can't just suddenly go out there and put it out there and be like, here you go, everybody be happy, because we can't risk our members taking a loss. We can't risk our members getting stuck with a broker that goes bankrupt or something like that. That's why we're being so cautious about this stuff. Okay. So in other terms, I can tell you this though, that I've had the auto trading running on one of our accounts for the last now coming up on 6th week, okay? And our account balance has gone from 15,000 to 26,000 over those 6 weeks. So I know that it works, and I know that we're doing quite well, but we have to be very careful when we try to replicate that across thousands and thousands of people. Okay. Other than that, Josh will tell you how bad auto trading is and discourage you from it, because that's what he has been doing to me, but it's not working. But okay, so did this analysis help you guys? Did any of you understand how to analyze a little bit better? Remember, just review this once more. We'll post the recording of this in the back office. Review it one more time, and you'll internalize everything, and you'll be good to go. Okay, awesome. So very good. All right, let's talk about a couple of other things too, really quickly. One, I'm going to talk about the affiliate side of things. Well, not really necessarily the affiliate side of things either. It's about everything. You'll see the new breakdown is now available on your right side. Because the earlier stuff was causing a lot of confusion, you will see this estimated matrix stats will disappear, because it's now going to be a part of your pending balance over here. Okay, so you'll actually get to see your approved balance here, where that came from, your pending balance, where that came from, and it's all in one super clear way, and you can analyze all of that. Okay. You will also get to see this breakdown of how many people are at what level, in what place, and so on. So you can see your earnings from that. You will also get to see that for your matching bonuses and so on. So you'll get to see where people made money there, and so on and so forth. So for all of the affiliates, okay, this should make it very clear. This should make it a lot easier for you to operate with. If none of you should have seen your pending balance go down, unless there were, chargebacks or fraud or something like that we found that we had to remove. But if you had that, please go ahead and just open a support ticket and say, my balance was this, it went down to this, can you tell me why that happened? And we'll take a look at your account and let you know. But I know already from looking at everything else, vast majority of you just had your pending balances went up from the matching bonuses being released and so on and so forth. Okay. Now, one of the other things we're about to do is we have been spending a lot of time preparing a lot of materials, because as you've noticed so far, we haven't put a lot of focus on the affiliate side of things. We haven't provided any marketing materials. We don't have, like we did in DST, we had all these opt-in pages and traffic system and everything else that we put out there. We're going to be putting all of that into the affiliate side now, because we're coming up on a time when the product is very, very solid. Majority of the users are making money, and we expect that to continue given all the new developments on the Signal side as well. Okay, so we are actually going to be putting out a new presentation that goes through all of this data. We'll be putting out sales videos. We'll be putting descriptions of each separate level. We have a PowerPoint that has been prepared by one of our affiliates who's done an exceptional job on that. We'll be putting that out. So a lot of things will be coming out over this next week to week and a half. And all of that is going to actually go to the whole next level at the event as well. So here's what we're trying to do, and maybe all of your influence will help. If you can just tell Josh that we want him to be at the event. We're trying to do a very special training session at the event where we're going to try and give away some extra things, some special things. And I also have an indicator version of my 1 minute, 5 minute, and 15-minute trading system. Okay. Now those are not signals that are currently in the back office. Those are the signals that we were going to use purely just for the auto trading. Okay. But I do have the indicator version of that, and I've actually shown that in some presentations before. We actually have a video of me going through it and running some back tests with it and showing you how that works. So at the event, we're going to be giving that indicator to the VIP attendees who are at Enterprise or Legacy members. You will basically be able to get that at the event only. That's the only time it's going to be given out. It's never going to be given out again. So if that's your big bonus for showing up at the event and meeting Josh and giving him a hard time about anything you can. For example, his UK accent is not really a UK accent, right? I mean, I was very disappointed because I was like, I'm going to talk to a guy from UK and I like the British accent, and then he just gives me this mutated version, which is from being in the US too long or something. It was kind of disappointing. But so at the event, here's what you need to do. At the homepage of Options Domination, just click on the Era of Event, the Era of Domination event image. It's going to show you where it's going to be held. We have the hotel reservations. We have special prices for all of our attendees and everything else already set up for you guys. It's going to be over May 29th to May 31st. You can see what the breakdown is. Now, tomorrow, the price is actually supposed to go up. You can see over here that the price is supposed to go up on April 27th. Super transparent, okay? We are being super transparent about it. We are trying to get the deadline on this to go from April 27th to May 6th. Okay, that's what we're trying to do. It's not entirely in our hands because we have to get that negotiation done also with the people at the hotel and our event organization and all this stuff. But we're trying to get that to May 6th, okay? So when you see this go up, if you see this go up, don't go, well, I bought this because of a scarcity or something. We are trying to extend this because a lot of people did not know about this until now. Once you get your tickets, get your event registration and so on, we'll see you guys there. We're actually going to also have some training sessions with our affiliates, and our affiliates will be able to show you some really awesome stuff as well. There is one major thing that we have been working on that will affect both the DST side and the options domination side in a very, very big way. We're talking about roughly 50,000 or so new members coming internally, okay, not just from the affiliate side, but internally from us, that obviously all the members in options domination benefit from because of the way everything is structured in options domination. So it'll be very exciting to see all of you there. As you can see, the VIP people get the special training session, which will culminate with the indicator, and hopefully we can get something secret out of Josh's days at Goldman Sachs. I'm sure he stole some secret recipe from there that he doesn't tell us about. And then, of course, we will also have a very special thing on the DST side of things for all of the members in the VIP side, as well as on the general price. And again, full transparency, right now, we have obviously already sold hundreds of tickets, right? Because we haven't really pushed it out yet, but hundreds of tickets have been sold, and 95% of the tickets have been VIP tickets because people recognize the value of that. All right, so just letting you guys know, I'm not a pushy sales pitchy guy, okay? I'm not trying to pitch you on, come to the event and your life will be different forever because you'll get to shake Josh's hand and you'll meet Kevin Hokon and this. Ignoring all of that stuff and ignoring all the community and the emotional fun that you have and whatnot, it'll be overall a very profitable thing for you guys. It'll be overall a very, very good thing, and we're going to try and work out ways where the VIP ticket and so on, it's going to give you some kind of discount. We always try to make sure that the price of the tickets is somehow turned into a product discount for you guys. So we're going to try and do that again. I can't promise you exactly how it's going to work out, but we're going to try and work it out that way. And there are going to be some very, very outstanding things revealed at the event that will be given to everybody who is at the event only at that moment, and some things that I think will just dramatically change what kind of income you guys are going to generate and so on. So that's basically the pitch you're going to get out of me. I'm going to make a video walking through the actual breakdown of everything in a little bit more detail, and put that video out there as well. But for now, I think the webinar has gone quite a while as well, and I don't want to keep everybody on a Sunday afternoon so long. Everybody needs to take their nap after the post-church giant feasty meal. So that's basically it. Hopefully the analysis helps you guys. I'm very excited to see where we go with all the new signal streams coming out, with the changes we are making on our algorithms as well. The split change absolutely killed it the past 2 days of trading alone. It's been really strong. So we're going to put something like that out there. And obviously we have auto trading coming out. We have the managed accounts coming out, and so on as well. There is one thing that I just want to point out to all the legacy members and all the enterprise members. Um, one thing you have to understand is when you are a member, and let's say that you're an affiliate and you have a team or you have other members who are inheritance level members right now, you can actually go to the transfer credits option and you can transfer credits to them. So I highly recommend that if you don't foresee using all of your 18 credits or whatever every single month, transfer some of the credits to your inheritance level friends or to your downline, okay? And what that does is that allows them to get in on the trading sessions. It gets them to see how awesome it is and how profitable it is. And that naturally wants them to become an enterprise or a legacy member as well. So it's a great tool for you as an affiliate, but it's also a great thing because you're not wasting those credits. Then you can just give those to somebody who will be able to attend the sessions for you. One very simple example is one of our members, for example, is not able to attend the sessions because because the late time he has to sleep. So his brother lives in on the West Coast, and he just transferred some credits to his brother. So his brother actually is attending the sessions and taking the trades instead, right? So that's one of the benefits of the transfer of credits. The credits work exactly the same way. They expire every month, and then they are refilled every month. So every month, legacy members are filled back to 18, enterprise members are filled back to 7. Make sure when you give these credits to your inheritance level people, you tell them, hey, there is a timeline on this. You got to use this. Don't just sit on them. Use them because they will vanish. So again, it gets them to take action right away. It gets them in the trading sessions and does a really good thing as well for you. All right, so hopefully all of this helps, and just is good for everybody. I'm excited because I think we've accomplished a whole lot in 1 month of bug fixing and putting out something which is designed to decipher markets and issue profitable trades and create this whole thing. I think we've done a pretty decent job, all because of all of you guys. Like I said, I love bragging about you because you are the most patient, most helpful, most wonderful people, because some of the content I see being put out by different options domination members just to help out others is amazing. It's amazing. You have seen some of the people in the Facebook group. They have been working and helping and managing and moderating and everything else at really no personal incentive at all, just because they want to help each other. So let's keep that up. Let's keep that going. And hopefully we can get Josh to want to become an options domination member sometime too, just because of how cool this is. All right, so there's that. One little parting little fun thing is I am actually adding something very cool and very new to Legacy here shortly as well. In my testing, it has had an upwards of 90% win rate because of the way it functions, and it's just like a super strong thing. I'm going to show you. I'm going to explain what it is. It's a system. It's not just a signal. It's actually a system which will transfer that'll convert this whole new newsfeed system into a very, very profitable strategy for all of you. Okay, so we'll put that out there in Legacy as well, and obviously you'll have chat support coming to Legacy here starting next week as well. So everybody be happy. You all have a great weekend, and of course, I guess the trading starts tonight. So we'll see you there.